silver is being drained from all the miners by China buying the doré and the concentrate, so it doesn't come off of an exchange, paying double what the West will, in a way that really masks the amount of silver they're buying. But they're the second largest producer of silver in the world. What the hell do they need to do that for? Because it's not an industrial metal, it's a strategic metal. Right. And he who has the commodities makes the rules. So to see India doing this, and they've been the largest purchaser of it. Chris Marcus from Arcadia Economics, just Google Chris Marcus, Arcadia Economics, and Bart Chilton, Chilton. Bart Chilton was the head of the CFTC, the commodity police, basically. And he came on Chris's show and he said the following. I'm going to paraphrase it. He said, Bear Stearns went bankrupt and they held the largest short position in silver that the commodity exchange had ever seen. And at the time, it was Hank Paulson and Ben Bernanke. Ben was the head of the Fed, and
Paulson the
Treasury Secretary, right. And they called in Jamie into his office. This is being told to Chris on this podcast. You can watch it for yourself. And Bart says, we said to Jamie, listen, Jamie, Bear Stearns just went bankrupt. They have this massive short in silver. We need you to take it. Okay, fellas, I'll take it, but I will be in violation of position limits. That's okay, Jamie. We'll give you a period of time to pare them down so that you can get into the proper position limits so you're not violating, you're not doing anything illegal. Okay, great, cool. So off he goes, he agrees to take it, and some time goes by, and Bart Chilton takes a look at things, and he's like, he runs into his superiors, and he says, listen, we're at the end of the time frame we gave them, and in fact, they haven't pared it down. They've in fact increased it. They are in violation of our agreement. They're in violation of antitrust law. They need to be prosecuted. And he was told, back down, Bart. It's a political decision. Back down, Bart. It's a political decision. Bart died a week later. Now, I'm not saying it was coincidental.
Right.
Maybe it just was natural. But what I am saying is that the head of the CFTC admitted that what was happening was that they were allowing this bank to not only not pare down their short position, but in fact increase it. And he was told to back down. And it's the only time I've ever heard anyone in that position say something like that. Now let's go back. Why would they do it? Because the need for silver is so extreme in making high-tech weaponry and aerospace, like the stealth bomber. If there's 500 ounces needed in a Tomahawk cruise missile, how about the 260 billion we've given in weapons to the Ukraine? And all of that is high-tech weaponry that needs copious amounts of silver. Ask yourself this question. On the LBMA, the London Bullion Metals Exchange, they admit to having right now about 800 million ounces of silver, of which 500 million belong to the ETF. So they say we have 300 million. They also say that's the lowest position they've had since they started keeping records because it's being drained.
It's like the little boy who cried wolf, and the market doesn't believe it. I think that's what it is. In fact, I think even the bulls don't believe it, that we've witnessed so many pullbacks that are counterintuitive, that we're so far past when this should have all happened. And it's happened so many times. And how many times do I need to hear it? And I think the market just doesn't believe it. And that's what, to me, potentially makes this so very strong. Rick was talking about, Rick Rule, about in this environment, he would expect to see the majors go first. The ones that you mentioned, the Barricks and the Newmonts, and then the mid-tier majors, and then the juniors, and then the explorations. And of course, also maybe my favorite, the royalty stocks.
The royalties for sure.
But it's interesting when you put it in that light. And I think the same thing is true about silver. People just don't believe that it will go. And I think that's fair. That's a fair point. We've watched it get hammered for so many years and so many times when the fundamentals would say that it shouldn't. And yet gold, here we are, showing or leading the way. Now, that's also typically the way things go. Gold typically leads the way in these moves, and silver follows suit, oftentimes outpacing percentage-wise gold's gains.
Look, I just think it's absurd that the way that the Federal Reserve and their open market committee applies what they believe is the preferred rate for millions of savers and borrowers and spenders and manufacturers and on and on and on. And I guess to me, what I find most humorous is how they are trying to gaslight us into believing inflation has been defeated. And it's important to understand that the CPI is a worthless statistic, and it's intended to conceal the debasement of the currency, and it's happening at a rapid pace. One of the things I found very interesting about the 50 basis point cut, you had everyone saying 25 basis points, maybe 50. We go all the way back to the beginning of the year and see how many times they've changed their strategy. There wasn't going to be any rate cuts. There was going to be 4 rate cuts. And here we are. We finally got this rate cut, a 50 basis point. And here we are. We look at gold. It's up to basically its all-time high today. Silver's up back again above 31. But one of the things that I found interesting is that actually Treasury yields went higher on the back end of the curve, and that to me signals big trouble ahead for the Federal Reserve if they're lowering rates and the back end goes higher. But that's the way it should be if you're thinking logically that a government has given in to inflation, raised the white flag and said, we're going to focus on our dual mandate of full employment, which is a bunch of nonsense. And in essence, they're doing what all governments have done. They're giving in to inflation and taking the easier path rather than tightening their belt and choosing austerity. They have done what all governments have done, and they have pivoted. And it's I don't know. I think ultimately this leads to some real problems as we continue down the road. I found it also interesting too, just in reading some articles last night about John Paulson, the billionaire hedge fund manager, who has finally said what others have figured someone like him would say, and that is that if Kamala wins the presidency, he will pull $9 billion in assets from various sectors because of what she is proposing, in particular, raising the capital gains tax, raising the corporate tax, and introducing a 25% unrealized gain on people just like Mr. Paulson. And he warned that if she were elected, that this would lead to mass selling and market crashes. And we've been talking about that. There's no question. But the bottom line is that when I look around, I see that we are at a point right now, Dunnigan, where there is no escape from not only the constantly depreciating currency, but also from this massive debt. This is a situation where the wealthy people don't care about inflation. Their asset prices have gone sky high. But for the people who are, struggling to put food on the table, they're the ones that are going to be affected by this the most. And a lot of these people are going to vote for Kamala, and they don't realize that's probably the absolute worst thing that you could possibly do, at least in terms of what it means to the dollar, what it means to inflation, what it means to the economy, and what it means to the big investors who will say, I'm out. Between November and January, if she wins, you are looking at the greatest market collapse in the history of this country.